Is the rally that we're currently seeing fake or real? Today, I want to touch on why I think the rally that we're currently seeing is going to be sustained for a bit longer from three different perspectives: the technical perspective, the fundamental perspective, and a conspiracy theorist perspective. Starting with the technical perspective, if we look at what happened at the end of last week, we had a massive down day which had a lot of volume. That to me signals that retail is finally capitulating on their positions and smart money is going to start looking into accumulating. We then retrace down into the 50% area between the bear market low of 2022 and the top that was set at the end of last year. Now, from a value perspective, 50%, that's a good value to start at least looking at buys. Then you couple that with the volume on the way down, and then we had another very large volume day on the way up. So that to me signals that there was a accumulation happening in that area, and then we got our push up, which is getting us out of that range now. And then at the end of last week, we sort of just ranged around and didn't do much. So again, that's completely normal. We can't expect the market to just shoot up in one go because we had a very large volatility or average true range day where we were moving hundreds and hundreds of dollars in days where that would usually take like weeks and months to do for the market. So I'm not expecting massive rally up, although it can happen because we've been so sharp on our way down. So if we do have that, it's a V-shaped recovery. But I'm not going to be concerned if we just range around a bit, retest some of the levels that were set last week, not at the lows, but just above the lows, and then we have our next leg up. The other technical point that I have here is that gold has been absolutely on a tear. Like it's just been going up and up and up and just hasn't slowed down. But over the last 1 or 2 weeks, we've seen a lot of volatility. The average true range within the days have gone up, both on the way up and on the way down, meaning that there's increased volatility, which could signal some sort of topping on gold. Now, that would make sense with a sort of bottom being formed on the equities because if gold has truly topped, then the money would be flowing from gold into more risk on assets like equities. So that's another confluential factor as to why these equities risk markets could actually rise. From the fundamental perspective, there's been a lot of activity happening. Firstly, Trump putting a pause on tariffs on all countries other than China for 90 days. The tariffs have been now reduced also to 10%. So to me, that the markets reacted positively to that because it gives Trump and other leaders time to negotiate better deals and maybe even remove the tariffs, or he might pause the tariffs again for 90 days after that. So to me, that signals that there's still 3 months where we could have quite a bit of upside. And then again, he could decide to just remove the tariffs or pause the tariffs again. So to me, that still gives us a decent amount of time to have some upside in the market. The downside there is that he's escalated a trade war with China. So now the tariffs that are put on China are at 145%. But this morning, he actually removed the tariff set on electronics. So that accounts for, I think, roughly 22% of the imports into America from China. So removing tariffs on 22%, that's quite a hefty percentage. And I wouldn't be surprised if over time his relationship with Xi gets better because it's already in the gutter. They both have lost respect for each other and there's limited downside here. Like the only way is up. So that allows room for there to be improvement in the relationship, which is again positive for the market. Now, from the conspiracy theorist perspective, I think that this was all just market manipulation for personal gain for Trump and his insiders. He's got some pretty smart people around him, like Scott Besson, who was a CEO or some top leader at a hedge fund. And he knew that this tariff news would do some big damage to the market. And ultimately, that's exactly what happened. We retraced over 20% to the lows that was set last week, all whilst the labor market remains fairly resilient. Unemployment ticked up barely to 4.2%. So they made a great move to try and recover the markets right before data gets worse, because if unemployment was to increase, money would be pulled out of the stock market to then fund people's livelihood, and that would have a disastrous impact on the economy. So now bringing sort of positive sentiment back into the economy is good because people still have jobs. Earnings have still been relatively strong, although earnings will be coming out over the next few weeks. So that's why I think it was all for personal gain. Although these are all the reasons why I think the markets should rally, there's still one risk that makes me feel a little bit uneasy, and that's instability in the credit market. Traditionally, during a time of uncertainty, you'd expect safe haven assets like US Treasuries, the most safe haven asset in the world, for the price of it to rally because the demand for it should go up. And inversely, the yield should go down. But even during all of that uncertainty, we were seeing the yields actually rise, especially on the longer end of the curve. What that can mean is that the cost of borrowing goes up because the yield on those bonds have gone up. But we'd ideally want the yields to go down because that allows credit to flow throughout the economy more easily because repayment costs of the bonds are lower for companies to endure. The instability could be caused by large market movements, making hedge funds having to unwind some positions because of the leverage they were using. And that meant the collateral that they had to be liquidated, and that could have caused the whipsaw within the credit market. I'm still biased long due to all these other factors. Hopefully this was an informative video for everyone. Let me know if you agree or disagree in the comments below. And if you enjoyed it, like, comment, and subscribe. Peace.